Guys, this is our 17th webinar, and before moving forward, let me put up with the legal disclaimers. Suggesting all content presented, discussed here will be purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use any of the views presented here in your trading or investing directly, indirectly, then you will yourself and yourself only will be liable for any profit or loss of profit, and we do not hold any liability for this. Not that we had discussed the legal disclaimers, let me give you a quick introduction. My name is Nirav, and I've been conducting these monthly Applied Elite webinars since last year. So this is done monthly. So this is fifth month of 2020. So basically our 17th webinar at this point. If you want to join in these webinars at a later point, then let me quickly point you to the website where you can find the email section or email subscription part. So basically this is the website over here. You can find that on this email subscription option, you can go and subscribe. That way I can send you an email whenever I'm conducting the next webinar. And other things regarding my work is that you can find my video course on Elliott Wave by going to my website again, 50is.com/Elliott Wave course, right? If you are interested, you can check the video course here, and all the details, etc., is presented. Track record and everything is also there. You can check it is above industry standards with proof and everything. And last thing is that I do offer personalized training or coaching, which is a 3-month program, which is more thorough and more specific to the individual requirements in very small batches of 3 to 5 people. So if you are interested, you can make the formal inquiries here, which is the link will again be in the description as well as on the top of the screen. And just in case you want to note it, it is 50is.com/training-program-LT. So for now, that is all for my stuff that I offer and the things that I am doing. And the way we will proceed in this webinar is that we will be discussing the charts of WTI crude oil followed by gold, S&P, Nifty, and if we get time, then maybe we'll look at some other chart. But these are the 4 main things we will check, right? And the way we'll proceed is after I have discussed the chart, I will ask you guys if you have any query. At that point, you can go in the comment section and type in the query. But the questions should be very specific in regards to the discussion we have made. They should not be out of the discussion we are doing and should be with regards to Elliott wave and what do you say, the counts that we have discussed, right? So let's get on with our discussion. And currently on screen, I have the chart of WTI crude oil. Before moving on and seeing what this chart is doing or what not it is doing, let's have a quick discussion, a quick look at the discussion we did in the last webinar. And the last webinar was conducted on, this is posted on 26th for 2020, so must have been conducted on 25th April 2020. And let's quickly have a look at the chart of crude oil around 151 or after 151. So let's check 154 for something. Just in case you are viewing this later on as a recording, keep in mind to turn the quality to 1080p. Otherwise, the things will look quite bad here, right? Because the background is black. So from what is visible on this chart, let me see if there is any specific point that I have pointed out the whole scenario. So yeah, the conclusion from this analysis was that we were looking for a down leg after 26th, right? And we were looking for a down leg because our view was at that point in time, our view was that this is still one leg remaining in the downward direction based on this Elliott wave count, which is definitely not what happened. Actually, I'll discuss more on the actual chart. Let me see if this is clarifying that or not. 1, 2, 3, 4, 5. So yeah, this is where we updated the count. Yeah, so that was our analysis, and we were thinking of the one more leg down, basically. That's more or less the say case here. Maybe one leg up for wave 4 continuation, but eventually we were looking for one leg down. So that is the case in the last webinar. Let's check the current data feed and see where we are. So 26th of April, so 24th of April would be somewhere over here, right? So if we place a vertical line over here, so as you can see, there was no clear, say what you call a leg down in this market. And the reason is quite simply that our count is not followed like at all. So let's have a look at or discuss what is actually going on in this market. So the point that I missed in the last discussion was simply that we have this as a O&A chart, but on the actual futures chart, O&A by the way means basically this is a CFD chart or contract for difference. But on the actual future chart, we have made a low of minus 37.5 is the level, I think, or somewhere around that minus 37 level. So the simple fact or the fact of the matter is that if it has gone to minus 37, then it has already completed whatever impulse in the downward direction it had. But the simple fact that I was looking at the chart on the CFD, that point got missed out. But the situation was sort of unprecedented because 99% of the time the CFD charts and future charts are pointing towards the same thing, just because the data went negative and there is no provision for negative data, I think, in CFD charts. Although CME had intimidated that the negative data can be shown on terminals, but I don't think that was the case with CFD brokers. So that was a mistake or sort of a rare thing that to happen. So I won't even call it mistake. Fact of the matter is the impulse which was on this weekly chart. Let's quickly have a look at the bigger picture for a sec. So what the impulse was on this weekly chart was according to this count of A down, B triangle, C down. And within the C down, we were expecting wave 4 down, but since it has gone to negative levels, we will consider that impulse is complete. So in theory and in practice, this correction is complete, is what we should say. Unless of course we are expecting minus 40 to be the next level. So leaving the jokes aside, if the low has been established, then that means we need to relook at this market and try to figure out if this market is giving a proper impulse. If it is an impulse, then which is the wave structure or wave count we are within this impulse. So for that, let's head back to say what I think 4 hours should be enough. No, let's head back to 1 hour. Yep. So on the 1 hour chart, if we check the market from the last low, by the way, if the internet is disconnected for a while, then do wait. I will just change the Wi-Fi and join back in. The internet has been fluctuating a little bit for the last few days. So there might be a case where I have to rejoin the session. So do not leave off. I will join within 1 or 2 minutes if such a situation happens. So getting back to discussion from this point of reference, which is the low on the CFD chart, again, I'm specifying this is not the actual low here. You will have to refer to the futures chart, but let's just take it from where it is around 11ish levels. We are of the view that we have impulse in the upward direction, and this impulse, which is coming from a lower level, much lower level, which is not on this chart, of the view if we follow this green count, that this is the wave 1, this is the wave 2 down, and this is the wave 3 up complete, right? So if we just follow this green count, then if this is the correct count, then wave 4 should ensue, and wave 4 generally goes to 23.6 to 38.2 levels. Although that is just a guideline, it can just go up from here as well. But my view is that a correction might take place over here, and even if it doesn't, the better strategy here would be to wait for a corrective leg down here. So for instance, this could be our A and B and C leading to wave 4 down over here, right? And once a correction is there, then I personally would like to see or figure out some long trading opportunities on this market. Theoretically and practically, if this count is followed and we see an ABC correction, then it should go out and market should go up and take out the high of what do you call 2740 something levels, right? So that is basically what we are expecting in this market. We are looking for a correction and then a leg up. That is our main hypothesis. Second theory is that second view is that it can go straight up for the wave 5, in which case we will assume that wave 4 is circled complete over here and it's not continuing. That is possible, but less likely, quite less likely. So I personally will wait for down and then up with these levels in mind. And keep in mind, you can follow this count, but it would be a better idea to go to the futures chart and refer that chart with this count in mind, because that would lead to a little more clarity, I would say. But since all my work is over here, I'll just stick with this chart for now. So that's our view on crude oil. I guess that's the main view. The another alternate view, which is very low probability, is that you can say that this is A, B, and C, right? Although, as I just mentioned, because extremely low level has just been registered, we should consider the leg up as an impulse. But just in case you have an exceptionally bearish view, you can go ahead and say that this is an A, this is the B, and this is a C. And that at this point cannot be relegated. At this point in time, it is a possible count. But again, I would just consider that as a low probability scenario. And my strategy would, as I discussed, remain wait for a possible sell, then plan for long. So that's our view for now. Let me know quickly if you guys have a query in this regard, else we will move on to the next chart. Please use the chat section if you are clear. Just type in clear. That way also we can just move on. So guys, this is a bit of an update here. The discussion made in the webinar yesterday, I was not satisfied with one of the points, so I have updated the view here. So this is later done recording, which I'll be adding to the webinar recording. So just wanted to point that out so that the people who attended the webinar are not confused. So getting on with this discussion, this is the chart of gold 1H. Let's quickly have a look at what was discussed in regards to gold in the last webinar. So in the last webinar, there were two views, H1. Let's quickly check where H1 is or the main count is. This is, by the way, H2. I'm still waiting for checking H1. Yeah, this is H1. So as you can see on the screen, H1 was suggesting that W is complete over here, X is complete over here. And this is going to be an A over here and correction over here of some sort, complex, flat, zigzag, triangle, but basically downward movement, right? Downward movement from this level of 1726 was what we were expecting, which should later be followed by one leg up completing the Y. So that was the count in the last webinar that we discussed. And let's have a quick look. And yeah, this was hyper 1, by the way. So the main count that we were expecting to be seen in the actual market. And the second hypothesis was that Y is already complete as a small, as a and B and very small C, which is very low probability. But as you can see, it was a hyper 2, so not what our main view was. Anyways, let's get back to the actual discussion and see what the charts have done so far. So the chart discussed in the last webinar, which I just pointed, was on the daily time frame. So the market was 24th April over here. Yeah, so over here the market was, and we were expecting that once we were expecting that there is a sideways correction which should see a downward leg movement sooner or later. So for now, we do have the same count being followed. Nothing is altered. I would say it is going as expected. And let's have a quick look at the updated view that we have so far. So in this updated view, this is by the way on a shorter time frame, that is 1 hour. So this is our point of reference for that discussion. This discussion 1450 levels. From here on, I am of the view that this is a WXY correction in the upward direction. And either the wave Y is already complete here, or we can have this correction continuing with one more leg up, right? So in either case, either if the Y is already complete or it has one more leg up to complete over here, both the cases are suggesting that a downward movement should follow in this market, right? So as you just see, we are still in alignment with our past count, and the count so far looks to be following as expected. If the wave Y, which we are expecting in the downward direction, follows right from this level, then we can expect the price movement to be around this support region of about, what is this, 1580 to 1560 or lower levels, right? If the market does go and give one more leg up, then we will have to check at that point in time and figure out some possible targets. But really quick, out of this discussion, I can make the point that this can be viewed as a 3 down, 3 up, and then 5 down kind of correction. That is a simple flat. So this will be your wave A, 3 down, right? This will be your 3 up as wave B, which is either complete over here or will have one leg up remaining before it is complete, and should be followed by 5 legs down, right? If this is a flat, that is what I mean to say. It can be some other complex correction, or simply a triangle as well. But in all those cases, also we will be expecting downward movements. So fact of the matter is that sooner or later this counter should show some sign of weakness, and that will be our clue or point where we will plan our shots, right? Right off the top of my head, since the point is unclear if this wave Y is complete over here or has one more leg up remaining, the only clear comment here I can make is that if this market goes above this level, then we will just place our alert here, by the way, at this point in time. And once it is crossed on the upside, then we will start to plan shots. At that point, once it has crossed to the upside, we can then place a new alert on these swing lows, for instance, over here as short entries. That is one way of looking at it. But better strategy would be to let it cross above this level and then strategize, because at that point, new information will become available in this market. So long story short, we are still following the same count as we were in the last discussion, and still looking for selling opportunities on this market. And just to add on, this particular triangle that you see over here was actually followed in the Slack group and was posted beforehand. That is this break above this high was actually captured when I was looking at this chart on regular basis actually. So a lot of things do get captured over here. So this is by the way, the post on Slack here. We were looking at this count and this triangle was there with alerts over here. So let's check what happened in the next one. So as you can see, it did give the break. So just wanted to point that out, that this chart has been a bit clearer compared to the others, and keep that in your track list. Sooner or later, it will give a clearer trade. So that's for my main view on gold spot. And the secondary view will be that if the wave B is somehow already complete, which I do not think is the case, because there is no clear pullback for wave B, then it can go straight and shoot up in price. But as I said, that's not even something I'm considering at this point. Of all the multiple hypotheses I've considered, that isn't even the top 3. So yes, straight off up, if it goes, then that will be a low probability scenario. So first of all, we will like to see a correction and then up. So pretty much I am of the view that the count here is being followed. And that's all for our discussion on gold. Wait and watch for a short before entering any long position, with the idea of
with the idea of keeping an alert near 1764 for the upside. Once that is breached, we will look for sell, or you can also keep an alert below this wave B low level, which is 1658. That will also act as a good level, suggesting that once this is crossed to the downside, that wave B is most likely under play. So these will be the two levels to watch out from a strategic point on gold. So that's it for this discussion.
Moving on to S&P's 500, the account that I've been following so far is that we are in a corrective upward movement, and it is followed pretty well so far. So I won't really make. I will discuss another scenario as well, but let's just go on with what we have so far. So this is my current outlook, right? And if, yeah, 1 second, we'll just have to quickly check what we discussed in the last one, see what webinar, so that to build upon that, around 28 something. If I recall correctly, overview was sideways before one leg up. As you can see over here, the view was that this market will go a bit sideways, possibly as a triangle, zigzag, flat, whatever, before giving one leg up, and in eventuality it will break this high of whatever that is. So this was the discussion in the last webinar. Let's see if there was any other point made in specific or not. So there I am just discussing some longer term views. So, and here we were just discussing some possible targets, whatever. So yeah, I'm pretty clear. You can even check it later on. The analysis was sideways and then leg up. And as a matter of fact, in the Slack discussion, we were able to actually, let me just mark the date first, 24th Alt V. Is that okay? I had just hidden the drawing tools. That's why it wasn't working. So from 24th of April, which is when we did our last discussion, it first went up and then sideways, and it is still going round and round around that level. However, I like to mention the simple point that in the my own tracking of this chart on 1 hour and 15 minutes, we were able to track this leg down, this leg up, this leg down, and this leg up as well. So basically all these swings were actually tracked out in the group. Before we move on with the current discussions, actually this is generally the case with S&P, and it is a bit unclear. But in this particular case, it followed the whole scenario or the whole count so well that we were able to track all the movements. Let me check if there is a 24th April. I can show some charts or something like that. So I think 28th, yeah. So here we were waiting for a down leg on this chart. Later on, it went up, and after that, it gave the strong fall. The targets was around this 2800 level. Later on, it even achieved the, oh yes, I recall. This one just kept continuing for a while, and this was supposed to be averaged, and then later on it gave over fall. So this one was not really completely as expected. At this point, we were clear that this was ABC complete and target minimum, and this was the main target around 2800. From there on, it did give the whole fall, and from what I recall, it did go and touch this lower level as well. Let me check as well. Yep, as you can see, it touched the lower level, and then our view was it should give a small correction up, either from this level, current level, or by touching the lower level of this white support zone. And it not only did it go up, it even touched our upside target. So you get my point. I'm not going to go into much detail, but we were able to track, I think we were able to track this move as well, but that's beyond the point because that was before that webinar. So this has been a good month for tracking these complex markets. Gold and S&P, which generally are not that clear, were clear on even short-term or intraday timeframes. Moving back to our analysis, what I was suggesting was that we have possible WXY, and if this count is correct, then Z should have one leg up, right? Because Z is what A, B, and C. And if we are to go with this, then this looks like most likely A wave complete or continuing, should be followed by a corrective B, and should be followed by a leg up for C, completing the Z, right? And possibly at that point in time, our upside targets will be achieved. Who knows, maybe exceeded. But if you look at this chart from a theoretical perspective, then you will find that from theoretical perspective, all you need is a high above wave Y, right? As soon as you form a high above the last high of wave Y, which is this level, whatever this level is. So as soon as this high is exceeded, you can theoretically say that Z is complete. And although it is a very low probability scenario, I have seen it happen a few times. And I think one time it was in gold, I think 2 or 3 months back. And I discussed that one in the webinar as well, maybe 4 months back or 5 months back. But anyways, you can check if you're really interested. But it does happen very less, but we cannot relegate it. So we can take the Z as a low probability count complete over here, right? Like H2, H3 something. But the main count remains that A up, B down, and C up. So my view will be that who knows, that this correction might extend, me pointing out X doesn't really mean X is complete here. X waves are generally complex as well. So it is possible that X is still continuing. So it doesn't really matter, because I personally will be waiting for a clear correction before any longs in this market, right? So either X is complete or X is continuing, whatever the case is, wait for a clear pullback before taking any longs. That will be our hypo one. Wait for longs, no straight out longs, unless of course you have the capacity to hold this position in futures and carry it forward even when it's falling, and then average it 3-4 more times. I know people who can do that as well. Some trades are pulled up pulled up like that, but that leads to extreme negative scenario when the market is near these levels. So better scenario would be wait up for this X completion or B pullback. Whenever it becomes clear, try to take the longs. And worst case scenario, first H1 is wait for long. Worst case scenario is that it is done and dusted and Z is over here, which I am not agreeing with at this point. I don't think that Z is complete here, but well, it's going to do something improbable, then it can do that. So yeah, that's our main count on S&P, which I've discussed H1, H2. Main idea is wait for longs, but only after a pullback. I think I should mention it as a down arrow and then an up arrow. And if you are really interested or keen in the targets, then I think the targets that we discussed in the last webinar will be pretty much valid here. But just wanted to point out of no Elliott wave, but just simple discussion, that this looks like a good level of resistance over here. So this level of above 3100, you can check the precise level, 3130 something. Yeah, 3130 I think was the level we discussed in the last webinar as well. So 3100, 3130 something can act as a good resistance. But anyways, more precisely, I will only be able to check once this X low is in place, right? Or I mean, this X low is in place, or this B is in place. I think that's all for our discussion on S&P. Give me a quick yes or no or any questions you have. So before we move on to the chart of Nifty 50. Okay, clear everyone. Yeah, one last point I'll just like to discuss, although I am not in alignment with this count on S&P, is that if you really want to take this movement as an impulse, then maybe you can take the case that this is a 1, this is a 2, this is a 3, this is a 4, and this is a 5. Again, I'll just like to mention I'm not really in, I'm not really taking this as an impulse up. But even if you consider that count, it doesn't really matter, because even if once this impulse is complete, it will give that correction and then a leg up. So what I mean to say is, even if you count this very low probability scenario, the directions, as we said previously, was down and then up. In this case also, they are down and then up, although it will play out a bit differently, but that remains to be seen, and I'm not really in favor of this count. Just long term view, still downward trend on S&P. Yes, Pawan, I think the long term view is sideways. If not bearish, then at least it should remain sideways. Though a bearish leg will not be a surprise, but even if there is no bearish leg, after this big of a fall, you do not expect markets to go straight up. If they do go straight up by any chance or luck, then this will be a good sell or mindless selling after the high, because that would be a false break. 99% cases, I would say. You can check the past data of Dow Jones. Previously, when there was this huge fall, it took about good amount of time to just keep going sideways before moving another leg up. So I guess you are clear there, and we are clear on our discussion on S&P. Let's move on to the chart of Nifty's 50 and see what this market is doing. So here, let's just quickly have a look on the chart of, I mean, not the chart, the video that, or the webinar that we discussed in the last meeting. Check. 3354. So we are already there. So if I recall correctly, the view was in alignment with S&P. We were expecting sideways and then one leg up. And here I might be discussing multiple counts, but let me see where is the main count where I was saying sideways and then a leg up. Yep, that's the main count. And this was fitting with our understanding of the S&P, which Nifty is currently also seemingly following. So let's just see if it followed a sideways and then up leg, or what did it do after 24th, right? 24th, somewhere over here. So it did not really go sideways, or you can say that theoretically it did go sideways, because I have a triangle sort of mentioned over here, which is actually a triangle, but not really in the classical sense where I was thinking more sideways movement, right? But it did follow the counts nevertheless, because the direction was sideways to bullish. So sideways to bullish means you can sell the puts. Strategically speaking, I'm not suggesting any trades, but strategically it means you can sell the puts, and that's sort of one way of looking at it. And so it did succeed in all that, doing all that which we discussed last time. And I recall correctly, one of the targets we were thinking was this gap zone, right, which was suggesting a target of 10,000. Now, as you can see, it never really touched exactly the complete thing, right? Completely, if it had touched, it would have been around 10,000 something, but it did go and make a high around 98, 90 something. So 9,900, you can say almost give and take of 100 points. So I would say it did follow everything theoretically, practically, both ways. It was tradable. Directions were as we expected. So let's leave the past to past and let's see what it is doing at this point in time. My view is again in alignment with the S&P, and as we discussed in S&P, my view was most likely it will give a correction before it gives the leg up. And same here for Nifty. I am thinking that most likely that if we just take this as our point of reference on 9900 or whatever that level is, then my view is that this is a ABC, so basically a W, and wave X is either continuing or complete. But whatever the case is, let's just say it's complete. Let's just assume that. Then this will be having another A down, B up, and C down. And the reason, as I just mentioned, is that because it is fitting the alignment with S&P, and secondly, if the market has to really go up, then it should at least give a little bit deeper correction. It's not even touching the 50% retracement, right? This is, by the way, the 50% line, 8698, or let's just say 8700 is the 50% level. So it's not even there. No rule or guideline saying that it has to go there. Okay, so I just discussed a bit of variation in my count. I have taken the W here. So, but long story short, you can count this leg down as multiple ways. Someone can even say that this is a 1, 2, 3, 4, 5, and with a bigger wave 4. And I will not say it is wrong, but it doesn't really matter. The view remains the same. I am expecting at least one leg down before up. If it goes straight up, that's also our hypo 2, I would say. That is also possible if it goes straight up, but I will be interested in creating positions if I see a clear leg down, right? That's my strategic understanding of this market. If it goes straight up, then probably I will wait a while and see how it is forming the counts on intraday and stuff like that. A little more detailed analysis than this general overview, and then plan on taking the trades. So yeah, that's the strategic for take on Nifty. Wait for a correction before any possible up move. H1. H2 is suggesting straight up. H1 is obviously, as the number suggests, 1 is the main count we have. So yeah, that's the strategy all along. I think pretty much simple here. Let me know if you guys have any query on this chart. Else we can just and Nifty discussion. What is the long-term trend? Could we see a takeout of 71, 75.11? And where is 75.11? So he's referring to the low, right? So if it is to take 75.11, my view is still sideways to bearish, because as you can see, I have only taken this whole leg down, if I remove all the counts, as a corrective leg down, right? 3 waves correction. This again is in alignment with the S&P chart, where the leg down is again 3 waves correction, although that one is much more clearer. So if it is a 3 wave correction, then it can just either continue sideways as a correction, or it can continue sideways as a correction for a while and then give another leg down, as in a zigzag, right? Let me show you what I mean. So if you are going with that, then this will be what practically it should look like. But yes, it can go down, and since our view is either sideways or bearish for the bigger picture, I wouldn't say that it will go straight down falling, but it is possible, given that my current, at least like short-term view also is bearish. And minimum target I'm expecting is the 50% line, which was around 8700. I think 87 would be somewhere over here. Let me check the exact. So not to mention, it can go lower as well. That's why I have the 78 and 90 plotted here. Will it go below this low? I won't speculate that far, but I won't be surprised if it goes and gives a deeper retracement. I am actually short in some major stocks on Nifty. So my view is actually quite bearish, if you ask me. But I won't speculate that far. It doesn't really have much practical significance at this point. 50 as it is, 50%. Any room for further upside? What do you mean by 50% of 50% of what? Maybe you are referring to this high to this low, maybe, right? It hasn't really properly touched 50, I think. But yes, it may go down. That, as I said, it may go down as a possibility. But instead of playing the index downside, you all know full well that index is an average and stocks are what constitute the average. So if Nifty goes down this much, then there are tens of stocks that I can name at this point which are already at this low, right? Mostly banking stocks, right? Just check what do you call banking and finance stock. Bajaj Finance, ICICI, top of my head. Axis Bank is also near the low, and Bank of Baroda, I think, or some other bank with starting with B, has already broken this low substantially, like every other session. PSU banks like SBI is already breaking the low day after day. So you get my point, right? Even if you have a very bearish view, you will not play it on the index. You will try and choose the what do you call weakest stocks. So that's that. Yeah, Amazon. I am actually following Amazon. Reliance Owner, can we see a few stocks? Bajaj Finance, ITC. Just to mention, I have a position in Reliance, so I will not be able to discuss that stock. But if you check the last analysis of Reliance, it sort of followed precisely. You can probably do that on your own, or I can post GIF, which is the current new thing I have picked up. That do post a GIF of the things that we have discussed and that worked out over here. So I'll possibly post for that in regards to Reliance, but I'll not be discussing the stock. Spurs 2 is price goes about trend line Y, then we can confirm Z has started. Y. Price goes on Y. I would not say that's a confirmation, Sayed, because it can just form a complex structure, It can just keep going sideways here, then fall and then go up. So a leg up, I will not say that it's a confirmation that it is going up, right? Though I have a count that it says it can go up as H2, but having that arrow up does not mean I'm saying a move above this high is a confirmation for straight up. That's not what I mean. As a matter of fact, it can get a bit messy or complex here. I'm just pointing out the directions for that reason. Aurobindo, I think Aurobindo, let's check if I have a clear count on that one. One of the pharma stocks, as I recall, was clearer. I think this was Aurobindo, maybe not. Okay, it was Aurobindo Pharma. So my view on pharma sector is that maybe the movement might come to end sooner or later, right? So as you can see on Aurobindo Pharma, this is our point of reference about the around the low of 290, right? I'm not going to discuss the past data. So if you just look at the pure chart, and we already know the impulsive nature is 1, 2, 3, 4, 5 in a Elliott wave studies. So then comparing this to the rough structure, it has followed it so well that you can even see 1 and 2 and 3 and 4 and 4. I think 4 I have taken as a triangle here, right? And this is looking like the 5th. So my point here is that if this is the 4 and 5th is under play, then sooner or later this 5th will complete and then we can look for a proper selling opportunity. But for now, I will not be selling this Aurobindo Pharma for sure because wave 5 can become extended. And as we all know, the rally in pharma stocks was exceptional. I mean, the Nifty's turn to the upside was having a huge contribution of the pharma stocks. So I will say keep this one in the watch list because the counts are so very clear. And if this is the right count, I mean, it can follow a few other things. You can also say that no, it is not an impulse up, it is an ABC correction where this is the A, this is the B, and this is just the start of the C. So I won't say that is not the case, but as I said, I'm not really going to short it anyways. I'll just wait for a proper completion of the fifth leg and some clear evidence before I enter any sort of sells. But yes, that's a good stock you pointed at, Sandeep. And let me see if we have a clear outlook on Amazon, because although I'm following it, I'm not sure if it is worth discussing in this public webinar because sometimes they can get way more complex and like require way more time than we have on our hands. So let's check 3, 4, and 5, 4, 4 complete, 5 there. Okay, so worth pointing out here that what is that? This is the fourth, I think. So I think this is worth pointing out, and I'll discuss it from the shorter term perspective only. I won't be discussing the whole thing. So for Amazon, I think we were tracking it somewhere over here, and we were able to check this movement out, or this was actually posted in the stocks_US channel on the Slack. And then we were tracking this correction, and we were able to take at least one leg or two legs. I think two legs we were able to clearly take. And somewhere around this point, it became unclear to me. But anyways, it did give a, like this whole big move and some other big moves were captured on this chart. Leaving that aside, following the count is 1 and 2, and I think this is the third, this is fourth and fifth. So if we check it in regards to our fourth and fifth, then it is unclear that is this fourth complete already or it is continuing as a complex. As I just mentioned previously as well in our another chart discussion, I think it was Nifty and S&P both, that wave force can get messy. So you cannot just say that this is 4 complete, this is 5 complete. So yes, it can go sideways first, right? Sideways in the sense in this box, right? And then go up for the last leg before it gives a bigger correction. Or it may have already started the correction, that's also there. But keep in mind, if it is going sideways for this 4, which I have pointed out here, then this wave 5 can be a little bit bigger, right? It can go substantially higher as well. So I won't say there is a clear trade on Amazon, but this is a stock worth tracking at this point in time because it is running very, very clear. I'll say exceptionally clear. So if you track it for a few days, I think even on the 4 hour or 1 hour time frame is fine enough. So even on those time frames, I'm pretty sure it will give a good clear trade setup later, sooner than later. For now, I will just say we are unclear if it is straight down like this or it is down and then up. That's our analysis on or quick look at what do you say, Amazon. I think we have discussed 2 stocks and all the main charts that we discussed, and we are already at the 1 hour mark. Let me know if you guys have any queries on Amazon first. Charts says broken insistent low. Do you have count on it? Yes, Sandeep, I have count on about 100 plus charts. I will definitely not be discussing Bajaj Finance. It's one of the complex ones. It's actually had, it will take like 20-30 minutes just to discuss that chart. Clear on Amazon. What about other guys? A little bit more participation will be much appreciated. And yeah, just one more thing I want to point that I have seen the participation in the webinars is rather decreasing rather than increase. Also, the channel has started getting lesser views and lesser likes compared to what I used to do previously. Previously, I was getting somewhere around 3,000 plus views on some videos as well. So what my point is that these videos and analysis takes a ton of time, and if I'm not really seeing any good participation, then eventually it does not work out, right? So I guess you guys know what I mean. So if you can share, which I think many of you can do, is in your capacity, because I mean, who doesn't speculate in the stock market? Even if they don't know Elliott wave, everybody does it. So your participation or sharing is important here, right? And that's one point. Second point is I'm planning to start on the next 3-month batch from next month, which will be June. So if you guys are interested, any of you in the audience, those are, by the way, much more personalized than this quick outlook. For instance, in those classes, we spend 2 to 3 hours sometimes on just one index or one stock chart. So take my word for it. They are all on a different level. Don't compare it with these public webinars. I have my limitations of what I can discuss. I cannot just spill out all my hours of research here. So any of you are interested, or if you know someone of your friends or colleagues who might be interested, then kindly point them to this web page of 50hours.com/training program-LT. And you can also refer to my past accuracies of 3 consecutive years. I think 3 is more than enough. I never really checked what was the 2019 accuracy report saying, because compiling at least one of them took 24 plus hours. So anywho's, 3 is more than enough. If you want, you can check it is way above industry standards. And I'll be more than happy to work with the serious students. So that's about it. Next batch announcement and the passive video course is always there. If you guys have any other query, you let me know. Last webinar, you had told any plans for, yeah, Sandeep, I was thinking in that regard, but it's just way too little of money in those things. I mean, if you are a trader, you already know how much you can make per trade. So I don't want to take a headache of managing 20, 30, 40, or whatever number of people I can get for pennies. So I just relegated the idea of any possible advisory at this point. If I do plan on doing it, then it won't be, I mean, I don't see how it will work out. Though I am interested in managing bigger funds. If you guys have anyone in contact, I will exceptionally be grateful if you can point them towards me. I mean, the bigger money in the market is in the market itself. And I have the skills and expertise, and I am already tracking way too many markets to mention. Like every day I'm tracking 100 plus markets regularly. So if there is any contact you have as a management opportunity, then do kindly point it towards me, or you can even mention to me in email. You can just go to the contact us page here. You can email me directly as well. It is info@50eyes.com, or you can use this simple contact us page. I think that's all for our discussion. And yeah, last thing, do share it if you can. I mean, obviously everyone can. I will appreciate if you guys share it. So with this, let's end this conversation. Okay, guys, take care and bye for now.